There's a reason why 90% of traders fail, and it's not what you think. After documenting more than 1,000 trades over an entire year, I found that successful trading comes down to 3 data points that most traders never track. Let me show you what they are. But before I reveal these metrics, let me show you something interesting. Like many of you watching, I started trading because I wanted financial freedom. I watched those gurus showing off their Lamborghinis and luxury lifestyles. Not going to lie, it was tempting, but after blowing multiple accounts and losing a 5-figure PAMM investment, I realized something crucial. The difference between profitable traders and those who fail isn't their strategy, it's their data. The first critical matrix most traders ignore is their expected value per setup. After analyzing over 1,000 trades, I discovered something fascinating. This is my backtested data. Even with a 21% win rate, I remained profitable. Here's why this matters. Most traders obsess over win rate, thinking they need to win 70 to 80% of their trades. But look at this. Let's break down my actual numbers. Total trades 1262, win rate 21%, average win 3.93R, average loss 1R, expected value per trade 1.28R. If you want a copy of this trading journal, check out the link in the description below. When I first saw these numbers, I couldn't believe it. All those years I spent trying to increase my win rate when I should have been focusing on my R multiples instead. Focusing on your R multiples ensure that you are more likely to be more profitable compared to someone using a high win rate strategy. In order to have a high win rate strategy, most of the time you'll be closing at a smaller profit target in order to keep your win rate high. Remember, you are trading to earn money, not to have a high win rate. Ironically, it's easier to earn money with a low win rate system as your expected value tends to be higher on average. This is why most traders fail. They are tracking the wrong metrics. But here's where it gets interesting. The second metrics reveal a pattern I would never have noticed without proper tracking. I started documenting 3 things for every trade. How I felt before entering, my emotional state during the trade, and lastly, my reaction after closing. The patterns were shocking. Trades taken while feeling frustrated, 68% loss rate. Trades taken while feeling neutral, 79% success rate. Trades taken during FOMO, 82% loss rate. But here's the real revelation. It wasn't just about avoiding negative emotion. I discovered specific emotional combination that precedes my best trades. The highest probability setups occurred when I felt neutral before the trade, remained calm during drawdowns, and felt neither excitement nor fear at exits. This data literally transformed my trading psychology. Instead of trying to control my emotions, I simply learned to avoid trading during certain emotional states. Let me know in the comments below what you tracked in your trading journal. The final and most surprising matrix changed everything about how I approach the markets. Let me show you what I discovered after analyzing 1,000 trades across different time periods. Here's how my trades performed across different sessions. Asia session, 22% win rate with an average return of 3.69%. London session, 24% win rate with an average return of 3.74%. New York AM session, 25% win rate with an average return of 3.58%. Others have 17% win rate with an average return of 5.02%. With this information, I know that my trades perform equally well in all Asia, London, and New York AM sessions. These are the sessions where I will be awake to trade. This can get even more interesting when you break it down by specific time windows, which I do not have the data available. If you are able to track it down to the hours or even the minutes, you can find out the specific time when your trades can give you high probability setups. If you have learned something so far, hit on the like and subscribe button to learn more from such videos in the future. I upload videos to help you be profitable every week. Now, let me share something that completely changed my perspective on trading. Take a look at this trade. Beautiful setup, perfect entry, and the trade ran 26R. Most gurus will post this as their winning trade, right? But here's exactly what happened in my account. I only managed to capture 1R profit because I took 50% partial at 2R, moved my stop loss to break even, and got stopped out on my remaining positions. Now, I can already hear some of you thinking, that's the dumbest trade management ever. You left so much money on the table. Don't worry, I'll go through this trade in the trade recap section. Did it hurt watching this trade becomes a monster runner after stopping me out? Absolutely. But here's the reality check my journal taught me. Trading isn't about catching every big move. It's about surviving long enough to be profitable, following your systems consistently, letting probability plays out over hundreds of trades. My journal proves that my system works over a large sample size. These missed runners, they're actually part of my edge. Because for every runner I miss, I avoid multiple losses that would have destroyed my account. Remember, successful trading isn't about finding the perfect strategy. It's about finding the right data to make informed decisions. If you found this helpful, make sure to download the template and let me know in the comments what metrics you'll start tracking. Now, let's move on to the trade recap. Hey, what is up? So right now, we'll be going through my trade review for this week. So there are quite a number of trades I took this week. Actually, not a lot, but yeah. So as you can see, I'm currently sort of break-even-ish, right, for this week trading. So I'll just go through the most significant one, which is this trade over here. So I shorted NQ today on 27 December. So let me go through my thought process on taking this trade, right? So I was actually positioned over here, but I took a loss over here. So what happened over here is on the middle time frame, 1 minute. So we have this bearish bias, right? I inverted the scale. So let's just assume that this is to the upside. It'll be easier for me to talk about it. So we have this flush over here below the MAs, right? And we reclaim and we have a push, right? Bearish push to the downside. And we have our first pause over here. So at this pause over here, price was already giving us the bearish momentum, right? Over here, you can see very huge movement to the downside, right? And also because our bearish bias has been established, I was looking for a short, right, to position myself to the downside. So over here, I same as always, right? So the entry model flush below the moving average, reclaim with two demand zones being created and a buy stop above any swing high, right? So I was waiting for price to price taps me in and gave us this quite a strong candle. So I was actually waiting for price to break this highs over here before I shift my stop loss to break even. But unfortunately, price just gave us an equal highs and then just came down crashing, taking me out for a -1. And after that, I was waiting, right? Waiting. And on the middle time frame, I was given, price also gave us another pause. So right here over this candle, I was like stalking the price again, right? So over here you can see on the lower time frame. By the way, the higher time frame we have already established is a bearish bias. So I don't really care about the higher time frame for now. And on this lower time frame, we see our entry model, right? We have a flush below the 1020 MA, creating two demand zone, right? And and I set a sell stop over here. So it slipped me a bit and my entry was here and my stop loss was here. Okay, so as you can see, this trade actually ran at 31R. Is it 31? Yep, it's running 31R right now, and it is currently still running. I don't know, maybe it will run to 100R, but it doesn't matter, right? So what I actually do is I break even here, and I took some partial, I think over here. Yeah, over here. So 50% partial. If you remember correctly, this trade is running 31R, or probably, I don't know, 38R right now. And I partial here. Guess the number. 1.9, 1.91, right? When I closed the trade. 50% partial. So my trading system, right, is a quick BE system. So as long as price wants to go higher, I want to see it go, instead of coming back to whatever zones we have over here to mitigate, right? So if that's the case, then I'm not interested in the setup anymore. So I'll be waiting for another setup. So what happened over here is once we see price actually move away from my entry, we see this bearish impulse, right? So I shifted my stop loss to break even over here. And because price was around 2.5 R, right? So I trailed my stop loss to somewhere around this area. So I got stopped out over here for 1.91 R. I mean, close the partial, right, over here, because I was trailing with a trailing stop loss. And yep, so after my 50% partial got closed out, price, because it was opening, right, market open, so price came down, took me out, and went insane high. Well, if you ask me how do I feel right now, probably just an ouch, and I'll just move on with my life, right? But if you ask me this question maybe 4 years ago or 5 years ago, I would probably not be able to sleep tonight, right? Because I mean, this insane runner is like 31R right now, or even 38. I don't know, and it will probably go up to 100R or something. But does it matter? I don't think so, because what you are trying to what you are seeing here is one of the rare home run trades that my system actually can produce. But if you take a look at the bigger picture, right? So let's take a look at my journal. So from the start, 12 mid-December until now, right? My equity curve has been steadily going up, right? Over here, I'm currently at 7.23. Oh, and my win rate is actually only 22.73. Oh, how is this possible, right? Because I have a lot of break evens, right? So let's say if we take a look at the losses only, we only have, I mean, excluding all the commissions and spreads, I mean, no spreads, but slippage, etc. I only lost 5R worth of trades, right? Because most of the so-called losses are being cushioned by the break evens, or rather avoided, because I shifted my stop loss to break evens, right? Because many of these trades actually goes beyond my stop loss. So if let's say I did not shift my stop loss to break even, I will experience a loss. So this break even actually saves a lot of saves my account, right? So if you think about it this way, because some let's say you are not trading on your personal account, you are trading on a funded challenge or even a funded account. So without this 12 break evens, I would probably have lost my funded account or even lost my funding challenge, right? But because I have all these break evens that prevented the losses, I'm able to survive long enough for my edge to play out. because trading is a game of probability, and a game of probability is a EV based game, right? So we do not look at the next few trades. We look at a set of hundreds or 200s. So we play the long game in a game of probability. So I can lose maybe 50 trades in a row, but over a long period of time, maybe 500 trades, if I have an edge over the market, right, then my equity curve, even though our experience maybe minus 50R, right? But in the long run, it will be profitable and it'll be generally upward sloping, right? In the long run. So even though this has continued to run, it doesn't matter because what I actually get out from the market is just a merely puny small 1R. But does it mean that my trading strategy is not working? No, it is working, which is why I missed out on such runners because my priority is to protect my downside. So as long as I continue to take trades according to my trading system, then maybe next week or the following week, I'm able to reproduce such trade again, and maybe at that point in time, this week or whatever this price action over here will not take me out and give me the runner that I want, right? So this is all for this week's trade recap, and I hope that you learned something new or reinforce something in you, right, about trade psychology, because this is not something that extensive backtests will give you. You have to experience it yourself firsthand before you can actually know what to do and know how to react to all this nonsense. Not really nonsense, but yeah. Okay, I'll see you in the next one.